All right, welcome to the channel. Just want to try something new this time, get a little bit more personal. Definitely once I have my setup, how I really would like it to be, and a better backdrop and things like that, we're gonna have a lot more, of a view for you all. But for now, just want to try something new. Like I said, get a little bit more personal with the channel. As always, this is not financial advice, just going to be talking about the outlook that I had for this past week, reviewing that, and then also delivering the outlook for the upcoming week. So let's hop into the charts. I'm gonna share my screen real quick. How about I just share everything? Ooh, on the sound was even being shared. No, shit. Let's see. I think if I just leave it like this, and then I wonder, it's probably not even showing. Hmm, it's my desktop one. Let's see. I'll figure this out. Yeah, see that's what it's sharing. Okay. Stop the share. Y'all look, y'all seeing me live, figure this shit out. So I guess I'll just do one at a time, like this. Ah, okay. Cool. There we go. All right, bang. So we're gonna start with the economic calendar here. And just right, you see that Monday, as we mentioned, there was no high impact news. Tuesday, we had the CPI that was a highlight of the week that I was looking forward to. Wednesday, we did have some high impact news here as well. Thursday, PPI numbers, which you'll see I actually ended up being significant, just as significant as CPI, to be honest. And then Friday, there was no medium or high impact news. So getting into the charts. So you see here, we have, let me minimize this, get this out the way. Actually, I guess I don't need my camera on anymore. I don't need to see me no more. I'm trying to see the charts. So let me stop the video. All right, so we got the dollar chart here, and starting off with the monthly chart. So just want to draw your attention to these two black lines here, how they represent this inefficiency here on the monthly chart. Once we traded up to that January 2017 high and we finally broke above it, we left this inefficiency in price. We've since traded back down into that inefficiency this month. So this is a monthly chart, right? So in the month of February, early on this month, we traded down to the inefficiency, we rejected, and we traded back above January 2017's high, right? So essentially what I'm seeing is that we're working this level right now, and it would be pivotal to see the type of movement it makes and how it makes that move from the January 2017 high, right? But also just keeping in mind that one thing that I would like to see, and that I just want to go ahead and say it now while we're looking at the monthly chart. So having a forward thinking perspective about it, since we've made a lower low in February than January, and we trade into this inefficiency, and now we've been able to trade above January 2017 high, but there's still no confirmation of us getting any type of close on the monthly candle. We still have 10 days, 11 days left in this month before this candle closes. But what I'm thinking right now is that if this low in February can stay as a swing low, meaning that these 11 days pass, it closes up wherever, and then March's candle opens up and it doesn't take out this low, and then March closes and we solidify this as a swing low, then I would be looking, depending on how price has played out on the smaller time frames like the weekly and daily chart and the fundamental catalysts and things like that, I'll be looking to see if in April, May, June, right, those following months, if we have any willingness to trade higher and potentially, right, take out this high up here. So that is something that, like I said, I just want to mention that now because that is what I'm thinking as I look at this monthly chart. Dropping down to the weekly, so getting a little bit more annotations. See how that was exactly 3 weeks ago when we traded below that, well, traded into that inefficiency and rejected, ended up closing as a bullish week. And we've now had 3 bullish weeks print in a row. We weren't able to reach up to that 104.771 level, which is just the midpoint of this wick. But I'll be interested to see if we trade up there, how it reacts there, and if it has a willingness to get above it, use that support to run out this buy side liquidity at 105.631. Daily chart. So I did change up some of my annotations. I'm always, like I said, learning and growing, and any way that I can to help me be better at utilizing my analysis for trade ideas, I'm gonna, take those necessary steps. I felt like changing the colors of those volume imbalances would be beneficial to me. So they were purple. If you remember before, I've changed them to like a light gold. And so that's what these gold levels are volume imbalances on a daily. You kind of get to see what I'm talking about right here, right? What the volume imbalance looks like. And then these gray boxes are going to be inefficiencies, right? You see how you got this inefficiency between these candles here. And then the oh, okay, well, you can't see it here. But yeah, these lines up here are also represent inefficiencies, but I'm just gonna leave them as lines like that just to not get too crowded on the chart. I didn't want to just have a whole bunch of like just boxes. So I figured I'd make it a box once price traded to it and had some sort of reaction from it. And then until then, I can leave it as just the lines because I do use the lines for other things. For example, this potential daily resistance level that I have marked up here, which price was able to reject at first, right? Closed above, and now we're closing back below it after trading up to that midpoint of this candle here. And so just looking at this from the daily chart, we have been bullish, had a consolidation, one more push higher, but definitely depending on how price in the next week responds to trading up into these two daily resistance levels, right? If we see some sort of aggressiveness trading back lower to find some support, then I would use this as a catalyst for looking for more trades to the upside on the US stock indices. And so I know for the last couple of weeks in there, I had been bullish, and the only reason for that was because the dollar was trading up to potential resistance levels. But the dollar's been very resilient. It's been very also stubborn as well, too. If you look at like here on the daily chart, with it just moving sideways for real after it made this aggressive push for 3 straight days. And then now, right, we come into this week. So this was Monday where we opened, well, we actually opened pretty much where we closed. We traded higher, tapped that January 2017 high and rejected, got lower. Volume imbalance, right? Tuesday, trade below that aggressively. We actually took out this low, but then you see how we quickly got back above it and we closed on it. And then Wednesday, another push higher back up to that January 2017 high, closed right on it. And then we opened up with a gap Thursday, did trade back within that range below January 2017's high, but eventually we were able to, trade back higher, close above it, took this high. And then going into Friday, we opened up with a gap up, traded up into that midpoint of that daily candle, and then closing back right below this potential daily resistance level. So that's why I'm saying it's definitely you have to be willing to adapt. But the more that I understand certain things that repeat within the marketplace, certain things that make something a key level, and how I want to see price react at those levels will definitely start to help develop a everyday understanding of if a trade makes sense and in what direction, right? Because sometimes you'll be able to see something like this where you're down here and you're holding for potentially, right, 2 weeks here until it reaches a certain target, right? But in between all of that, there's still going to be opportunity, right? Just seeing how there was not much, like let's say you were in a buy from down here, you're not really making much profit off of that buy these days because the market is moving sideways. But within all of these candles, right, as we go to the smaller time frame next, you'll just see that playing at the key levels that are left behind by the high time frame, you can start to see some pretty cool setups that are just in and out type of things, right? You're in for just a day, right? You're just trying to get the bulk of that daily candle expansion, and you can see within these, speaking about just the anatomy of a candle, right? So like for this green one, for example, the green box here is the body of the candle. This line above it, which reaches up to where the high point of this candle goes, that's called the wick. And then on the bottom here, right, that denotes just trading down all the way to the low, that's the tail. So as far as just candle anatomy, right, we have wick, body, then tail. But so going down to the hourly chart, where we start to see these daily dividers and that yellow line denoting the weekly opening price. So you see how we open and we traded lower at first, and then we traded back above. We're tapping that January 2017 high as resistance. We do fall from there, right? Monday going into Tuesday morning, in which this was the CPI number release. So we got a nice drop down, which a lot of people most likely chased, shorting this, thinking that it was going to go and, maybe tap another support level or break one of them. But instead, it just ran and took out this low from last Thursday, quickly get back above this old daily volume imbalance. We traded back up to that. This 103.14 level I was been looking at for a while, looking for price to break here for so long that I decided that I might as well leave it on my chart because it seems like there's a lot of interest to work this level now since it took its time getting here and through it. But just you can see how on the smaller time frames, right, how we continuously just keep coming back and referencing this level until on Wednesday, right, we were able to find support there, pushed above it, first time touching that potential daily resistance, right? And from there, we did drop back to the weekly opening price inside of this whole inefficiency on the daily chart, right? And also that January 2017 high. We're able to find support there, run out this high, retrace again, right? Back to the January 2017 high, find support there, run higher, tap the midpoint at that daily candle, right? And then from there, right back down to that old daily inefficiency. So on the dollar chart, the last thing I want to show is on the 30-minute, marking up that new week opening gap. Now, each day also will potentially have gaps. As you can see, like up in here, there was a gap. As you can see, right up in here, we had a gap. As you can see over here, we had a gap. As you can see over here, we had a gap. And so these also were marked up at the time for those particular days for intraday trading. I did have these levels marked up and I was monitoring how price responded to them if they traded to them. But I've since deleted them because again, as I'm doing this review, there's no reason to have the chart all, cluttered with a whole bunch of, makeup. So just looking at it from a 30-minute perspective though, look at how, right, we have that opening gap. We trade back down to the close on Friday, basically consolidating here, utilizing that January 2017 high and the Friday's close. Then we finally get below Friday's close, right? Break out of that daily inefficiency to the downside, trade into this at the open with a gap down, that old daily volume imbalance, right? We're able to get below that. Like I said, ultimately just taking out this high from last Thursday. And then this was again as well, this was also CPI. So look at how this candle printed, the candle that traded down there. Very small body, big wick, big tail. And then we got a very nice bullish candle following that. Two candles of retracement on 30-minute. Basically a lot of consolidation up in here. And then the next day, Wednesday, we open up, trade higher, finally hit that resistance, right? Back down to the new week opening gap. Find support there, rally, take out this high, retrace, right? Using the January 2017 high, run one more time up to that midpoint at daily, and then reject off of that into the close on Friday. All right, so going into next week, before even looking at the economic calendar, structure currently, you don't want to fight the trend, right? The trend is your friend, quote unquote, which I don't necessarily believe in trends, especially when there's so much uncertainty and volatility right now. Now, I'd say short-term trends, but nothing like I'm really looking forward to just extend continuously long-term. There's always a potential turning of that trend just any day, honestly, based on a lot of the data that's being released to just try to get the economy back to its standard, I guess, that were set in stone when a lot of these rules and laws and stuff were set in place. But I don't really have much insight, to be honest, when it comes to the dollar, except for the fact that, right, we're seeing it trade higher. It's been trading higher, but it's also traded to, daily resistance levels in which we could see some sort of a short-term shift in trend from bullish, right, to potentially making a lower high. And kind of like similar here, you see you have a low, high, higher low, higher high, higher low, higher high, higher low, higher high. That's what you'll typically be taught when it comes to trends, right? That's what the the simple terms of what you would expect to see in an uptrend, right? But then vice versa on a downtrend, what we could potentially see is, right, we have a high, we have a low, then we will have a lower high, and then we will have a lower low, right? And then we will have a lower high, and then we have a lower low. And so just in case you weren't keeping track of that, there is a little specific tool here that I can use to not confuse you if I can find it. Haven't used this thing. Don't really use it here. It's called the pad. So basically we have right high, low, and then we'd have a lower high, right? Then we make a lower low, and then we make a lower high again, and then we make another lower low. That's what, right, it would be that vice versa, like I said, of what was going on here. So uptrend, but then this is what would be the representation of a downtrend. Not obviously perfectly, picture perfect to that just the drawing there, but you get the idea, I hope, right? But so yeah, that's pretty much where it's at for me with the dollar. I'll have to check out the economic calendar and as well as see how it opens up on next Sunday. That'll give me a lot of clues as well, just considering that we do have two key levels. One, a daily level here, this green, which is 103,985, and then we see this thick white line, which is an old monthly high. So we kind of have price within this range. I would love to see how it opens and then whichever, direction it does push, how it trades once it gets to those levels, right? So that's pretty much just what I'm waiting for to really have any sort of insight on the Dixie. But real quick, since we've already looked at what was, going on this week in the calendar, let's go ahead and just pull up next week so we can go ahead and get that figured out. So I believe President's Day on the 20th, so bank holiday. So trading will probably be low volume in the U.S. stock indices. Tuesday, we have high impact and medium impact news on the U.S. dollar as well as several other foreign currencies. Wednesday, FOMC meeting minutes in the afternoon on Wednesday. Probably not going to be too high impact. It'll just be more so, I believe. Let's go and tap into this. So yeah, it's 3 weeks after they released the interest rate decision, right? And so it's a more in-depth insight into the things that they talked about and I guess what influenced their votes. So possibly could be something depending on some of the comments and things like that mentioned in there could be very high impact in the market. We got GDP quarter over quarter for the USD on Thursday, as well as unemployment claims. So medium and high impact here could cause some significant volatility. And then Friday as well, we have some medium and high impact news as well. So it could be another exciting week, to be honest. We have high impact news every single day except for Monday, which is a holiday. So fuck yeah, right? Let's get it. All right, but yeah, so now going back to the charts, right? With that in mind, I definitely expect some sort of a movement, right? Higher, potentially back up to this high or lower. I'd even say possibly, I don't want to say challenging this low, but I will say back to the daily volume imbalance. So I would like to kind of use this as my whole potential range. So again, gun to my head, I don't really have right a clear direction. I need to wait until Sunday is open and then as well as some of those news reports coming out to see. But from looking at the monthly chart, you do get the idea of what I'm kind of expecting long term is for eventually maybe sometime in April, right, in the spring or even in the summer, if this market is going to start to run. I will maybe expect it to happen around then, with a lot of choppiness and consolidation being a theme until we do get some sort of clear direction of a long-term trend rather than just short-term trends always. But now, so getting to the US stock indices so that we can wrap this up quickly. Just going to do a quick rundown real quick, monthly, weekly, daily, hourly, 30-minute, and bang, we out of here. So E-mini S&P monthly chart, all you really see here is just lines denoting, right, certain highs and lows from previous months. That's it. That's all, right? So you see we were in December's range in January. We broke out of that in February, but no commitment. Over here on NASDAQ. So there was potential resistance within this candle, the midpoint, and then the inefficiency between these three candles here. That's what these lines are here that you see. And then also just old highs, because again, I have been bullish on my like weekly outlooks for these US stock indices, but that's just considering that we have already come off of lows from last fall and we are trending higher, even though there's a lot of choppiness, as you'll see when I get down to some of the smaller time frames. Dow Jones monthly chart, same thing. You just see certain highs and lows of the months that pretty much made swing points, right? I kind of had those marked up, but then as well as the ones that are closest to us. If we were to, turn around and start to trade lower, I'd be looking for how price reacts at these levels. Weekly chart, we're just keeping on down. So again, if you've been keeping up with the channel, this is a Fibonacci retracement, basically is indicating inside of these three red lines will be the area that I'm looking for potential weakness and Dow for it to then trade lower and start to reach some of those old monthly lows or support levels on whatever time frame. NASDAQ. So you see a little bit more annotations here now on the weekly. So again, we're also had, let me plug this bad boy up. We also had monthly, right? Like I said, that monthly potential resistance, you see that as well here on the weekly chart. And what's going on there is I'm just watching to see, right, how price responds to those levels and how it trades through them, how it rejects and things of that nature. And so on a weekly chart here, not really seeing much as far as to give me any significant, thoughts about it doing one thing over the other this upcoming week. But we do see that it did close black, which means that it would close higher than it opened. Although we have a very large wick, and then we do have a little tail down here that traded below that December high on the weekly chart. E-mini S&P. So again, we now have more annotations. You see basically the only real added ones are going to be the midpoint of this week, which we were not able to reach, but we did reject that December high for a third week in a row, and we did close green, which means we closed lower than we opened, right? And the other thing that's added is this potential candle being a resistance level. I got the midpoint of that marked up here as well. And actually what I'll do is change that from levels to prices because I already know what it is. So that way I can have a level, specific level identified because the other lines give me a level, a specific level to look at. So now I have a specific level that I could be targeting. But so yeah, same thing here, right? Obviously, just price has been trading higher. We still haven't taken out any swing lows yet on the weekly chart. So although we printed a swing high that was confirmed last week, and we didn't take out we didn't take out last week's high this week. So we are showing weakness, but we still haven't taken out any significant lows for me to start to think that it's shifting momentum or shifting trends to the downside now, especially without any commitment from the dollar chart. Like I said, I don't have any real bias on that, any set in stone bias. It's really soft, a really, really soft bias, which means that it could change any day, right? Now going down to the daily chart, we're gonna get a little bit more annotations. And so what you see, the main thing, right, to just focus on is right up here in this range. After we've been so bullish, we start to range out, but we're creating these huge volume imbalances, huge gaps in between days, right? But overall, if you look at the bodies of the candles, we're pretty much within this same range here. We're getting candles with wicks and tails, right, that are relatively large, especially compared to the body, size of the candle. But so this specific week, this was Monday. And so I was talking about how since we traded down into this potential daily support level last week, two of them, right, the midpoint of this week and this down close candle, which offers support, and we rejected higher like this, right? Um, Coming into this week, we opened up with a gap higher. We traded lower. We failed to get back down to that specific line, right, which is just denoting the opening price of this down close candle. We run up into these volume imbalances, trade above them, but close inside, right? Open up with a gap above them on Tuesday, which was a day of CPI. Remember, as soon as CPI dropped, and you'll see this when I get to the smaller time frames, as soon as that report came out, the market dropped, but then it just ultimately just kept stretching in a sense and created a large range. The highest that it made last week was on Tuesday on meaning S&P. And then you see, right, Wednesday was here. We traded inside of Tuesday. And then Thursday goes and takes out Wednesday's high and then takes out the low from right Tuesday and Wednesday. And then Friday, we get the follow through where we finally take out Monday's low. So we made a new low of the week on Friday, as well as trading below last week's low, right? And that is the daily perspective on E-mini S&P. Same thing here. Can't really call it as far as what most likely is going to happen. Need to wait until, the price of this asset opens up on Sunday and then start to use that data and core, in combination of the old levels that were left behind from last week's and previous week's trading, and then start to, day by day formulate a bias for that. Let's try to harden that bias day by day. Going into the NASDAQ daily chart. So yeah, again, you see these light gold, right, representing those volume imbalances. This was Monday here. So same thing when NASDAQ was expecting a bounce. Now watch this in comparison to the E-mini S&P. So Monday, right, we trade lower. Same thing. We failed to make it back down to that old daily support. But this time is actually the high of the candle. If you remember on E-mini S&P, it was down to the open, but that's because we had already used the high. So at that point, for me, the most sensitivity would be at the open. We've used the high here, yes, but we barely traded into it, right? So for me to then move this down to the body, I would need to see this low taken out, and then I'll start to see does that open and offer any type of sensitivity. But back to the flow of this week on a daily in NASDAQ, Monday, right, trade lower, bullish, completely through that old daily volume imbalance up to this old one, but we don't actually get to it. Next day, which is again, this is the CPI number. So we trade lower, but then we stretch higher, right? And then we end up closing higher on the day. Now, the difference here is Wednesday trades above Tuesday's high. That wasn't the case in even the S&P. Remember, Wednesday traded inside of Tuesday. And then what happened was Thursday took out Wednesday's high, and then we traded lower and we took out Wednesday and Tuesday's low. And NASDAQ, what we got was Wednesday took out Tuesday's high, Thursday took out Wednesday's high, and then Thursday took out Wednesday's low. So Thursday basically was outside bar, which is the opposite of inside bar. Like if you flip this and put this candle over here, then this would be an inside bar. But you see it takes out the high and the low of the previous candle. That's what's called an outside bar, right? Which is usually a strong indication that price is going to continue in the direction of the close of this candle. And we do see on Friday, we're finally able to take out Tuesday's low. But if we look at, remember looking up ahead, the top left, right? So Monday's low actually came in at, hold on, I gotta move this out the way. There we go. So Monday's low comes in at 12,265 and a quarter. Friday's low, 12,265 and 3/4. So we're actually 50 cents above the high from Monday. So the low of the week was actually still created on Monday this week. We weren't actually able to get down there and take it out on Friday. But that just represents, like I said, on well, actually, no, that has nothing to do with the way that the weekly candle closes, the lows and highs. It's all about the open and the close of the week. But we did see, and just to go back to it real quick, we did close as a bullish candle, but again, very large wick as well. The tail, both the tail and the wick were larger than the body, right? But then looking at Dow Jones, and this is exactly why I said I was going to stay away from Dow Jones. As you can see, it's literally been doing nothing but moving sideways within this range, which is basically right that the lower two three lines and that potential resistance level where I would like to see it trade lower from. But what's cool here is we open up here on Monday, we trade higher to that middle red line, right, of that weekly Fibonacci. On Tuesday with CPI, remember I said we traded lower first, then we stretch higher. Look at where it stretched higher to. The midpoint, this white line is going to be the midpoint of a weekly wick from an old weekly wick, right? Midpoint. And then we got the blue line is the midpoint of the daily wick, right? And look at how we trade into that, reject, close back below this red line, right? And then same concept here, like we had on E-mini S&P, where we have the high that we created on Tuesday. Wednesday trades inside of Tuesday. Thursday trades above Wednesday's high, and then it takes out Wednesday and Tuesday's low. But it actually made a new low of the week on Thursday. So US 30 was actually very aggressive to the downside. But then if you look at Friday, we trade lower again. We actually took out some weekly lows, right? We traded below, a couple of weeks worth of lows, and then quickly reject back above that that red line. So literally the bodies were just playing within here. And one thing that I like to look at this, I guess the way I like to explain it to people is that while everything that determines, right, the long-term trends of these things are being sorted out as far as like real world events and the fundamentals and all of these data reports, right, that are being looked at by the government, by the Federal Reserve, by other economies globally. While all of that stuff is being sorted out, it's just pretty much building up liquidity. Now, these are very large ranges. If you think about just from line to line, we got, let's say, to round it up, 34,300 down to, let's say, 33,700, right? So we're talking about a 600-point range here that Dow Jones is playing in. So that's a lot of potential profitability for someone who really knows how to navigate the smaller time frames and knows how to just take what they're given in a sense without being too greedy, trying to expect some sort of follow through. And I'll kind of give you an example of that as I drop down to the hourly chart. Even though, like I said, really trying to stay away from this one right now while it's stuck in a daily consolidation because I don't have the best time still of just, I guess what you call scalping. I do prefer to find, right, a move like this where I catch the high and then I'm holding it until it runs out, like, let's say the low of the week. But what's crazy is I was trading NASDAQ this weekend. As when I go down to NASDAQ after this, you'll see um, how things will sometimes play out differently among the three US stock indices. But it's still possible to make money if, like I said, you know what you're doing and navigating these on a day-to-day basis. But ideally, if I was looking to trade 30 this week, even though I told myself I wasn't, it was a beautiful delivery right up into that old daily midpoint of that wick, right? We got a nice rejection there. Even if I didn't catch any of it within here, right? Once it traded lower and then this candle traded back above here and back into this old 4 hour resistance level, right? On the smaller time frame. And I'm not going to go too much into it. I'm going to lower some going down to the 30. So if we see something on the 30-minute here on Tuesday, then I'll have an example to show you. But if not, oh well, later on, like I said, thinking about doing live trading and also, over time I will get a little bit more in depth about the intraday um factors that I'm really like considering. Right now, I'm just showing my perspective on how I analyze from the higher time frame. Because once I got started in trading, we were really looking at, as little as the 1 minute chart for real. So like this was all something that I was really not understanding the importance of for a very long time. And that's why I emphasize it so much now, because I feel like not that I was cheated or that anybody was teaching me wrong. It's just that the way that we were trading, it only required you to look at the smaller time frame. But there were some educators on the platform that I first got introduced to trading through that did preach heavily about utilizing the higher time frame. I just didn't have the tools that I have now to understand, right, what to expect at certain levels or what levels to expect something to happen at and to use for my trade setup, right? And again, these are concepts that later on down the line we'll get through. Definitely, like, I mean, if you got any questions as you're, listening and watching, please feel free to leave a comment. I'll definitely respond and do my best to answer any questions and maybe even like go into more depth about certain things in, upcoming videos if, there are questions about certain things. And again, if I don't know the answer to it, I'll point you into the direction of where I think you may find the answer, but just know I'm gonna do some digging myself too because I want to know as much about this as I possibly can. So any questions could potentially help me in my growth as well. But yeah, so daily dividers, right? Weekly opening price. We open up, we trade lower, then we're back at that opening price, right? We find some support there on Monday, rally up higher, failed to touch that line. Notice that, right? We kind of like crouch right below it, drifting lower, consolidating, and then we push above it all the way up there. This is with, remember, this is with that CPI number. So initially it was a drop down, and then it traded higher, and then it ended up right closing here. We're closing here, and then you see all the rest of everything that went on. And so this was, like I said, opportunity here from right anywhere from up here to down here. Let's say just back to the weekly opening price. And then I guess you could have said this is just consolidation, so nothing really high probability here. Even this, I would have preferred to trade above this high to get in on Thursday. But what it did, even though it didn't trade it above a high from Tuesday, it did trade above Wednesday's high. Like this was the highest candle from Wednesday. So it did trade above that high. And then we saw it, right, eventually trade below weekly opening price, took out all of these lows, but then no commitment, no follow through, right? We trade below those lows, and then we run back above it, and then drop one more time. You know what I'm saying? And then and ending the week, we end up right getting back above that bottom red line and closing within this range, right, real close to the opening price of the week. 30-minute chart. What you see here is now you had a new week opening gap marked up. So just the difference between Friday's close and Sunday's opening. I was going to mark out that gap if there is one and extend it out of time. You see pretty much every day, right? Monday worked it before leaving. Tuesday came back to it before, right? Creating this high here, which we've yet to take out, right? We drift lower. Wednesday, we tap into it, find support. That's when we run higher. And Wednesday here, Thursday early trades above Wednesday's high, and then we just off to the races, trade through that opening, yeah, back above, back through. Right now we're down here at these lows, low end of this range, and then we pretty much work these levels down here, right? Consolidating, building up longs, trade higher going into the close on Friday. But getting back to the hourly, on the Nasdaq, now you'll see that contrast. So weekly opening down here, pretty much the same though to start off, right? Trade lower, trade back above the opening price of the week, use it as support, run higher, right? Get into CPI on Tuesday, right? Where we make this high after we made this low. And then we make another low, but look at how we close bullish, real bullish, right? Really big tail, big body, small wick, higher again, lower, one more time lower, but not taking out this low. And then going into end of day, we run up higher and then we just drift lower, basically consolidating a lot of choppiness in here. And then we take off and we actually take out Tuesday's high on Wednesday when none of the other two had the strength to do this. So this was definitely a moment of potential frustration, but definitely to me in the past, would have been very frustrated about this just because of the fact that we were looking for a bounce to start the week or to find resistance and to trade lower. It did all those things, but ideally, I like to see the high or the low of the week made on a Tuesday because then I get right all of Tuesday, I get Wednesday, Thursday, and even potential Friday for a continuation of whatever potential trend is set up by that swing point from Tuesday. So if you remember my last video, I said that CPI could potentially set up a swing point that would lead to a trend that could be played for the next following days or weeks. So while this swing point would have been beautiful to not be taken out and to still see price trade lower, Nasdaq had other plans, right? So instead of it trading lower on Wednesday, we actually had a really aggressive up day, right? And in contrast, right, you see how Wednesday in US 30 was basically still an up day technically because it closed higher than the open, but you do see there was some downside first and real like choppiness in the sense of getting higher, and then immediately once we took out that high on Thursday, we left, right? Now Nasdaq very different, where we pretty much didn't trade lower at all. We consolidated and then we ripped higher. And then we didn't even take out that high on Thursday. And then we shit the bed, but then we closed higher. Well, we didn't close higher. And towards afternoon, we ran higher once again, right above these highs here. And then we shit the bed. And then we went into, Friday, just pretty much trading lower, very choppy though. And then going into those last hours of the day, where we trade higher. Going to the 30-minute just to be able to see that new week opening gap as well. You see that we only really utilized it on Monday, and then we came back to it on Friday. And contrast that with Dow Jones, how pretty much every day Dow Jones touched it except for Friday, but it got very close. And so just again, not much by way of any significant or hard bias, just a soft bias, very dependent on how it opens on Sunday as well as how the dollar trades next week. Considering that we have, in a sense, started to get aggressively trading lower, I will be looking for sure how it opens up, how it reacts, if it right trades down to this new week opening gap from this past week, if it has any willingness to get inside the December range. And I've already mentioned if it starts to trade inside of here, the lows that I'll be looking for, right? And then so hourly chart, wrapping this up, mini S&P. So we see how we have same concept where we trade lower, trade higher, above the weekly opening price, find support there, run, consolidate, going into CPI, we trade lower and then we trade higher, right? And then we did not, after all of this, right, choppiness and volatility, take out Tuesday's high on Wednesday, right? We did trade higher above the bodies, but basically right back into that midpoint of an old daily wick, right? Resist that, fall lower, take out these lows, trade back to that weekly opening price. We bounce one more time back into these old daily volume imbalances. In the afternoon on Thursday, run lower again, back to this old potential daily support, right? And then we did take out this low from Friday last week. And then, at the close, those last couple hours, we bounced off of that. And then last thing, 30-minute perspective. So we see that new week opening gap. We touched it on Monday when we traded through. We tapped it on Tuesday, found support. We did not touch it on Wednesday because we were too bullish to get back down there. And then Thursday, one more time down to it, find support, back to the old daily volume imbalances, right, in the afternoon. Then we finally ripped through it going into the close of the day, start just drifting lower, going into Friday. A lot of consolidation and a lot of choppiness, but we did continue to make new lows, as you can see down here. This low was taken out here, and then this low was taken out here, and then this low was taken out here before going into the close, like I said, running back up towards that opening gap in the weekly opening price, but we did close bearish. So just to wrap this up, let me stop share. Let me put myself back up here. I want to say. Represent GLC. Used to work there. Spent a good 4 years of service. I gave to that place. But that's something I did want to also show. It's just the hat for the blur. Good vibes only. Okay, baby. Good vibes only. So just want to thank you all for tuning in, and I'll catch you guys on the next one. Peace.